So, next question we're discussing is what is a cap rate exactly, and what's an internal rate of return? Before I jump into that, we do have a little bit of construction going on. As is always with commercial real estate, you find that things are always in transitions. Buildings are being taken down, buildings are being rebuilt, and of course new tenants are coming to visit. We just happen to be upstairs in downtown Sunnyvale, and it's going on downstairs. So again, please pardon our noise, a little bit of dust. I'd love to have you come visit once everything's open. So getting beyond the subject of construction, talking about cap rates. So a cap rate is a little bit different than other kinds of returns, such as an internal rate of return. The purpose of cap rate is to take a simple snapshot of what a property is getting in terms of cash flow as a percentage relative to the price that you pay on an all cash basis. So if you can think of it like this, if I were looking at $1 million property and the cap rate was 5%, that would mean you're going to get a $50,000 a year income on the property. If you were getting a 10% cap rate, that would mean you're getting $100,000 a year on $1 million property. That's how it works. So 10% is the percentage relative to the price that you pay, assuming an all-cash purchase. Okay? Simple enough. Internal rate of return, on the other hand, is a little bit different. Internal rate of return has to do with the overall lifespan of the ownership of the property that you've got it. So it takes into consideration the dollars that you spend going into the property, the cash flows you get as you earn income off the property, and the ultimate cash flow you get when you dispose of the property in the final year. Not to mention the appreciation that happens along the way. So an internal rate of return, there's before tax and after tax, but that internal rate of return covers, again, the entire lifespan, whereas a cap rate is a snapshot of the current income on the property or possibly the next year's income on the property as a interest rate, as an expression of that against what the price of the property is that you're paying relative to the income. So again, a 5% cap rate basically means 5% return on your investment. Thank you for the question.